Okay. Welcome everybody to the UK Forest Market Report 2021, produced by Tilhill and John Clegg & Co. My name is Gavin Adkins and I'm the Managing Director for Tilhill. And I'd like to extend a really warm welcome to all of you that have been able to join us in the room today and also those that are joining by live stream. I'd like to thank, first of all, John Clegg & Co for providing this wonderful venue for us to have the market launch today here at BNP Paribas. We will have 4 presentations for you today. First of all, Peter Chappell from Tilhill will present the market overview and the results from the report. Then he'll hand over to Ed Daniels from John Clegg & Co, who will be giving the seller's perspective on the market. Following Ed, Stuart Dobrovich from Aberdeen will discuss net zero transitioning and the role of nature-based solutions, about how the business is committing capital to nature-based solutions which will help to tackle climate change. And then finally, Dan Ridley-Ellis from Edinburgh Napier University will pose the question, what future is the forest growing? Suggesting on how the possible uses of forests and forestry products may change in the decades ahead. At the end of the presentations, our speakers will be joined by colleagues from Tilhill for a panel Q&A session. The Forest Market Report is now in its 23rd year and remains widely regarded as the most comprehensive publicly available record of forestry transactions in the UK. And this continues to be an exciting time for forestry in the sector. The positive long-term outlook for timber values has buoyed confidence in how commercial forests can perform as an investment, and the wider benefits of trees and woodlands to society and the environment are increasingly being recognised. Forests are seen as critical to growing the UK's low-carbon economy, which is why the sector is attracting unprecedented levels of interest from forestry buyers and financial institutions, some of which are experienced forestry investors, but others are new entrants into the market, with multiple objectives, part financial and part related to environmental, social and governance considerations or natural capital outcomes. This has contributed, as you will see from today's presentations, to the forestry market experiencing another record-breaking year, with average values more than double what they were 3 years ago. The total value of forestry investment market is reaching a new high. And so at this point, and not to steal his thunder, I'd like to welcome our first speaker, Peter Chappell, Head of Forestry Investment at Tilhill. Peter has worked in the forestry investment team at Tilhill since 2013, providing forestry investment consultancy across the UK, working for funds, individuals and institutions to acquire forests and farms and land for afforestation. He started his career in timber harvesting before moving to Tilhill in 2007 as a forest manager and then becoming a forestry investment advisor. He has a master's in international forestry and has recently become a professional member of the Royal Institute of Chartered Surveyors. Peter will be presenting the market overview.
Thanks very much, Gavin. It gives me great pleasure to be able to present the overview to you today with so many exciting themes which Gavin has alluded to. And without further ado, let's get straight into it. So first of all, just a little bit of housekeeping on the definitions of what we're speaking about. We're talking about the 2021 result, although actually the year straddles from the end of 2020 to the end of September this year. And for 2021, for the first time, we're speaking about 3 market segments. First of all, commercial forestry, as we have done ever since the inception of the Forest Market Report. Secondly, mixed woodlands, which we have done over the last few years. And finally, planting land. More on that later. And just to say, when we're speaking about commercial forestry, we are speaking about forests with at least 20 hectares of stock conifers only, whereas for mixed woodlands, we're speaking about anything over 10 hectares without necessarily any coniferous element. So, what's happened in commercial forestry in 2021? We've seen the market size remain approximately stable, although technically it is a record-breaking year, very slightly up from 2020. with just over 200 million worth of transactions. We've seen 67 properties traded, slightly up from the 61 we saw last year, although it should be noted that that is down from the long-term average, which is closer to 80. And finally, and perhaps most notable, is the stocked area we've seen traded. You will see it's down from 12,500 to about 10,400 from last year to this. Actually, that's the smallest amount we've seen traded since 2012, and it's 17% down from last year. As usual, Scotland takes the lion's share of the market, although Wales, as per last year, is a decent second place. Historically, Wales has been closer to 5 or 10%, so that maybe is notable of an interesting shift. No significant properties traded in England in 21, so hence the small amount there. Well, if the total market size has remained the same, but the amount of forest traded has gone down, clearly we're seeing values going up. And this year, the value increase has been substantial. It's a rise of 21% per stocked hectare. So it was just under 16,000 per stocked hectare last year, and it's gone up to around about 19,300 this year. Why is this happening? Well, we see three main drivers. First of all, simple supply and demand. As per the last slide, you've seen the supply is the lowest it's been for a long time, and as Gavin alluded to, we have many new market entrants. So there's a supply and demand imbalance. Secondly, if you have a look at the red line, you can see that timber prices have picked up, relatively speaking, somewhat this year. And actually, timber prices over the last 2 or 3 year period have firmed significantly higher than what they have been in past years. And this firming of timber prices is also running alongside a wider recognition that actually the long-term outlook for timber looks extremely positive. Many commentators have alluded to the fact that timber is a global commodity, that longer term we're seeing global population rise, we're seeing a mega trend of a drive to use sustainable building materials, and over time we're seeing more technologies drive the demand for timber fibre. And the final factor is the prevalence of second rotation forests in the market. In 2020, we reported on a new phenomenon of younger forests garnering the highest values in the market. And actually it was interesting. We went back through the data to see, well, how many of these second rotation forests are actually forming part of the market. And in 2019, it was only 10%. In 2020, it went up to about 20%. And this year, it's been closer to a third. And to dig into that in a little more detail, here is a slide which shows the value per different age brackets that we've observed over the last few years. And if you see the purple bands represent 2021, and you can see the brown bands 2020, how strong the values were in the younger age brackets, which are the brackets representative of the second rotation forests. It should be said, first rotation forests and second rotation forests are not binary. You don't go from one to the other. Actually, there's a gradual transition from first rotation to second rotation forests as crops within forests are gradually harvested and restocked. And we actually this year, in order to try and extrapolate what's going on there, we've moved on to using a weighted age to try and get into that a little bit more. First of all, I do want to draw attention to this. You will see, I've said the trend continues, but actually if you look there, the value under 1 to 10 age category seems to have gone down a lot. Digging into that, we've actually got a secondary trend to highlight here, which comes as a facet of having a different basket of properties available every year. But actually in that particular bar, all of the properties traded were under 50 hectares in size, whereas many of the other bars are representative of forests of different size. And actually, bigger forests in 2021 have traded at higher values, and smaller forests have traded at lower values. So there's a kind of sub-trend being shown there. But the main bar here, which I think is very striking, is this one up to 38,500 per hectare. And that bar is based on various forests of different sizes. So why are young forests worth more? Well, we think there are three factors that we can attribute this to. Roads. First rotation forests, often which have not been harvested, maybe don't have roads. That's a simplification, but actually it can have a huge effect on what the valuation of a forest if for many of these financial institutions that are using an income-based perspective, because the construction of roads is significant capital expenditure cost, and also once the roads are in place, as is the case in most of the second rotation forests, the value of standing timber can be enhanced because the cost of taking that timber out of the forest is reduced. Secondly, trees. Genetically improved Sitka spruce grow much faster and much higher quality timber than their first rotation counterparts. First rotation forests were akin to wild cattle, whereas the second rotation trees with the genetic enhancements are our Frisian cows of Sitka spruce, and they are growing fast, and they are, but not as often they said, oh, that means the quality is down. The quality is better, and that translates into much, much higher income projections. And finally, land. Land is getting better in forests, which sounds a bit strange, but actually it's getting better in aggregate. Because if we consider many first rotation forests, let's say in Scotland, some of them were planted on lands that were unsuitable as forests, perhaps on areas of deep peat, which we would not want to see as forested long term, but actually they didn't grow trees very well either. Equally speaking, on somewhat lower ground in other parts, we're seeing new forests being created, and in those new forests, the land is even better than it was the first time round. So the average hectare of forest land is gradually shifting. It's getting better land. And when we combine all of these factors, in the round, the value of a young second rotation forest in aggregate is stronger than a mature forest. So you may hear it said that this is all simply down to supply and demand, but actually we would advocate that it is not. Supply and demand is a factor, but it's got to be taken into a context that actually younger forests are worth more inherently. So, moving on to mixed woodlands. Well, the headline figures are there. You'll see it's difficult perhaps to extrapolate trends with mixed woodlands. They are managed for a diverse group of objectives. You can see the trend over the years in Scotland, England and Wales at the bottom of the slide. England probably has the strongest data set of mixed woodlands, which are often broadleafed in nature and may be used for other purposes other than forestry. It's a general upward trend, but I wouldn't want to dwell too long here before we get the chance to move on to the very most exciting bit for me, which is planting land. Before we get to the actual prices paid that we've seen, I wanted just to quickly mention what we're actually seeing in terms of the amounts of land that's getting planted. As you can see, actually the amount of forest that we've seen afforested is slightly down from 2020. What's the purpose of looking at this? Well, to my mind, the idea, thinking of this as investors, is, well, what's the opportunity? And you can see that the Committee on Climate Change has got very strong aspirations that would take us up to 30,000 hectares of forest planted per year by 2025. However, when you do look at the numbers at the top and the trajectory, I have to say, my feeling was if we had Scotland, England and Wales in the room as pupils coming out of their school exams, Scotland would probably get ticked off and told could do better, and Wales and England would probably get given exam fail, and if they came up with any excuses it would simply be blah blah blah, as others have said. But that said, actually for me that there is a positive in that the only way is up perhaps from here, and that we should hope that perhaps policies will come in place in the coming period. What about actual values? Just to quickly mention a definition. This is the first time we've formally reported on planting land, and we've taken a definition of it that planting land is land where within it up to 50% is plantable, and it is at a price point that it would be of interest to investors who were interested in afforestation. That doesn't mean necessarily it was bought to be used as planting land, and it also it is a difficult, slightly intangible segment in that it includes land from different agricultural grades, and it also includes lots of different geographies. However, all that said, we've seen on a backdrop of decreasing agricultural lands coming to market, compared to what we had last year in our records, we've seen around 6,500 hectares traded, up from about 4,500 in 2020. This is based on 70 deals compared to 33 recorded in 2020, and the average deal size in terms of hectares is down from 2020 at 93 compared to 139. I think it's of interest to note here that although Scotland is still the dominant area, that actually compared to what we saw on the previous slide of areas actually planted, there seems to be more investor interest in England and Wales. In England, this could be perhaps attributable to the Woodland Carbon Guarantee Scheme, and we've also seen new energy and grant schemes in England. In Wales, we've seen some growth of optimism about the permissioning process, and we've also seen wider recognition of the generosity of the Welsh grant planting scheme. But these are still relatively minor compared to what's going on in Scotland. In terms of the actual values, what matters to investors is pounds per plantable hectare. Why is it the plantable hectare? Well, ultimately it's the plantable hectares, if from investors using an income perspective, that's going to drive the capital growth, because it's the plantable hectares that give us the timber, long-term timber income, or the long-term carbon income, depending on whatever strategy our investors are using. And interestingly enough, pretty much Wales and Scotland have come up bang on same values on plantable hectares, which is actually quite interesting given how different their grant schemes are. But in any case, it's interesting to see how the land values, grant schemes and things in and around seem to have been taken into account by the market. In England, we think location and other uses for these type of properties is probably also having an effect, which is why that value is higher. And it should be said that this is a backward-looking data, and actually probably where we are right now, we're looking at deal levels which are higher than these values. But in summary, it all comes down to future outlook for timber and future outlook for carbon. And we'll hear more from that from our other speakers. But for now, from me, thank you very much.
So we have a few minutes before our next speaker. I wonder, are there any questions from the floor specifically for Peter on his presentation? Feel free to ask them now or save them to the panel discussion later. No? Okay. In which case, I'd like to introduce our second speaker, Edward Daniels, Head of Forestry at John Clegg & Co. Ed is a qualified chartered accountant with over 25 years of experience in accountancy, managerial and investment-related roles. Previously an investment director at FIM Services Gresham House plc, Ed has spent the last 10 years investing in commercial forestry, woodland creation projects and renewable energy schemes. His knowledge and experience of the UK forest investment market is extensive and detailed, having acquired over £400 million worth of commercial forest properties throughout the UK and Ireland. Ed will now present the seller's perspective.
Morning everyone. Ladies and gentlemen, thank you very much for attending the Forest Market Report 2021, sponsored jointly by Tilhill and John Clegg. Thank you, Peter, for providing your succinct analysis of the results. We know that our analysis does not capture every transaction that occurred in the marketplace in the period, but we do believe that it provides the broadest snapshot of the whole forestry and woodland market. With both Tilhill and John Clegg tracking the market closely, we believe that the Forest Market Report represents the definitive annual assessment for the whole sector. Let me quickly summarise the position today, and then we can look into where we think this market is going in the future. Peter has highlighted the following trends and has expanded on various themes, and they are higher prices being paid for commercial forestry, an increase of 21%. Timber prices remaining strong with a 7.8% per annum on an annualised basis increase over the last 10 years. Prices based on the Forestry Commission's most recent timber price data. Higher prices being paid for teenage commercial forestry properties, up to £45,000 per stocked hectare. A 45% increase in the amount of land with afforestation potential being sold. 6,480 hectares in 2021 with strong prices of up to £11,000 per plantable hectare, and significant amount of equity being raised by financial institutions on the public and private markets. Indeed, the Foresight Sustainable Forestry Company will begin trading on the London Stock Exchange either today or tomorrow. So what's next for woodland and afforestation and peatland restoration and amenity woodland? And of course, carbon and timber prices. This is where I put my head on the block and make some bold predictions and basically invite people to have a pop at me next year. These predictions come from a position of market knowledge across the sector, highlighting the various trends that might influence the market in 2020. I will discuss the following on the pretext of what's next for commercial forestry, planting land, peatland and amenity woodland. The key drivers that are influencing investors to pay higher prices for these types of assets are, of course, an anticipated increase in real timber prices and an expected increase in carbon prices. So in turn, commercial forestry. Commercial forestry is becoming more and more understood by investors as a portfolio diversifier for individuals, investment funds and financial institutions. The tax benefits are evident for high net worth individuals, and if structured appropriately, can provide these same tax benefits to private individuals who do not have the capital to acquire their own forest or woodland. Total commercial forestry returns over 10 years were 15.7% per annum on an annualised basis, as per the old IPD MSCI Forestry Index, which reported up to 2017. And on an annualised basis over 25 years, it was 9.2% per annum. Given the results that John Clegg and Tilhill have reported on over the last few years in the Forest Market Report since 2017, we can only assume that the FMR results would fully support and potentially improve this 15.7% number. To recap, the FMR has reported the following annual increases in the average price of stocked hectare of commercial forestry as follows. In 2018, it was £9,332 per stocked hectare. In 2019, there was a 23% increase. In 2020, a 39% increase. And in 2021, we've just reported a 21% increase. As a result, since 2018, there has been a 107% increase in value, i.e. values have doubled in 3 years. There is talk that the old IPD MSCI Forestry Index is going to be resurrected by an independent provider. This will enable an annual view of total forestry returns, i.e. a combination of income and capital to be assessed. Total returns incorporates the income generated, the biological growth and the market value at the date of the index that is present in a commercial forestry investment. The FMR provides a snapshot at any one time of the current state of the market based on the number of transactions and the value of them in any 1 year. Will these levels of return continue into the future? The main driver for investment returns for commercial forestry is timber price. What is your view on what a hectare of commercial softwood timber is going to be worth today, as it's going to be worth in 5, 10 or 20 years' time? Using improved Sitka spruce, there is clear evidence that the yield classes on the second rotations are higher than they were on the first. With volumes higher and timber prices higher, it can mean that we are talking about a 200% increase in value that a hectare of commercial crop can yield. A hectare of improved Sitka spruce can yield up to 600 tonnes rather than the 400 tonnes per hectare that it might have done with Queen Charlotte Island QCI Sitka spruce. If the timber price is 100% higher than it was previously, say £100 per tonne, than £50 per tonne, you can easily see how a 200% increase in timber value is possible. In addition to improved Sitka spruce and timber price, there is yield compression. There are risks to any investment, but as commercial forestry becomes more well understood through the use of improved Sitka, spruce, more efficient and better management techniques, the risk is reduced, which means that investors attach a lower discount rate to the expected cash flows generated from the investment, driving value higher. As further improvements are made to seed stock, and if the timber price continues to strengthen, you can see hectares of standard commercial forestry yielding up to 700 tonnes per hectare. And at a timber price of £150 per tonne, this represents a 75% increase in value. What it actually means in reality is that the Sitka spruce tree achieves maturity quicker, allowing harvesting to take place at a younger age, bringing forward your cash flows and ultimately improving your IRRs, your internal rate of return. The outlook for timber prices from a demand perspective, in my opinion, remains extremely positive, despite the recent slowdown in the market that the market is seeing at the moment. However, the impact of higher interest rates on the value of sterling has not been witnessed for over 10 years. This may have an impact on the supply side. Cheaper timber imports, specifically construction timber, will impact the value of standing timber in the forest in the UK. We must also remember that production of softwood harvesting is expected to drop off towards the end of this decade. In 2027, according to Forest Research, due to the lack of commercial planting in the 1990s. What impact will this have on timber prices? As the investment into plant breeding continues via the likes of Tilhill, the Conifer Breeding Cooperative, and many other woodland management companies, yields in the longer term are expected to improve, benefiting investors restocking now and in the future. So have we reached a peak in the market? I suspect that we have not. It will be intriguing to see if the market continues to believe that commercial forestry remains undervalued in 2022. Planting land. I remember the days when we were valuing hill ground at around £2,500 per hectare. We have reported that there has been a steep rise in the price of planting land to £11,000 per plantable hectare, up from £8,500 in 2020. However, I am sure that you will have seen there are agents selling potential planting land at £11,000 per hectare through and through. On the assumption that some of this property is unplantable, then we're looking at prices upwards of £15,000 per plantable hectare. These prices are in the round represented by land appropriate for commercial planting, which requires you to have a view on timber prices. The other key metrics are anticipated yield class and location. Although many market participants are expecting carbon income to be paid for mixed planting schemes, commercial and broadleaf, there is an exercise going on at the moment to unpick additionality, with the tests in the Woodland Carbon Code under review. Commercial planting land is based on forest economics, with on the whole no carbon payment, and native broadleaf planting schemes with carbon money. With ever-increasing values being attributed to carbon, landowners should ensure they are well advised. A new feature of the market is the prices being paid for land that is only suitable for native woodland afforestation. The buyers who are leading this market are largely motivated by the carbon story. New types of purchases are coming in, such as the Brewdog Beer Company and Standard Life, and I expect Stuart to expand on the investment rationale of his recent investment in the Cairngorms. Peatland. Peatland restoration and carbon can also be part of the new method of pricing hill ground and moorland. Previously, this land was valued based on its sporting potential. Now it appears to be valued based on emissions reductions, i.e. the number of tonnes of carbon that is restored, or if woodland creation is possible, the number of tonnes sequestered. We have limited recent market evidence, but a trend is forming. Kinrara, acquired by Brewdog, Ralia by Standard Life, and Glendy in the process of being acquired by an unknown investor, supposedly for biodiversity and carbon reasons. Prices for such land is now exceeding £5,000 per hectare. There are mutterings of corporate land grabs, and it'll be interesting to see how this debate evolves, and if these types of properties continue to be on investors' Christmas list. Peat hags, and the most degraded peat appears to have a very high value based on 19 tonnes of CO2 per hectare for 100 years. However, only a small proportion qualifies for this top rate. The other band is 2 tonnes of CO2 per hectare, and lots of hill ground will get nothing. Very careful evaluation is required, and a full understanding of the cost of delivery and ongoing maintenance, which due to the very early stages of this particular market is very difficult to assess. The amenity woodland market is driven by an individual's desire to own their own forest or wood. Whilst there is little realisable value in the timber, there continues to be a desire for people to own their own little piece of woodland. Part of that may be the drive to do my bit for climate change, but at present there is no obvious timber or carbon angle. The driver for the improved pricing being seen in the marketplace is the buyer trying to acquire green space for mental well-being, and good for them. The more people who understand the benefits of woodland will improve how they are managed in the first place, provide greater value, monetary or otherwise, such as mental well-being being generated from them, and begin to provide solutions to many of the issues of the current climate crisis. And finally, with global trends pointing to increasing demand for wood products, from the construction industry specifically, this is expected to lead to a strengthening of timber prices, which suggests that commercial forestry will continue to appeal to a wide range of investors on the basis of continued strong investment returns. There are excellent financial incentives for new woodland creation across the UK, with strong government support from all parties. Woodland creation and house building are the few topics which has true cross-party support and agreement. Land is a finite resource, and we need to make best use of it. Importing 3/4 of our timber usage isn't good if we can produce more by creating new woodland and making our existing woodlands more productive. We shouldn't be planting on grade 1 arable with Sitka, but there are strong arguments for us to find room for well-managed mixed species forests which can deliver on a range of objectives. Shorter rotations help to improve investment return, but they also improve resilience of woodlands as impact of climate change is lessened. From an amenity woodland perspective, carbon credits may be issued for longer rotations. As more broadleaf woodland is planted and it becomes better managed, selling timber for construction purposes in the future rather than firewood may become a value driver. And currently unmonetized natural capital, such as biodiversity and ecosystem services, may become monetized, or certainly clearer. Investment managers need to demonstrate that they are meeting their environmental, social and governance obligations, and an investment in commercial forestry, woodland creation and peatland restoration clearly demonstrates this. Overall, the signs remain extremely positive for woodland and forestry creation, opening up opportunities for potential sellers of either existing woodlands or land suitable for afforestation. Thank you very much.
Thanks, Ed. Does anybody have any questions for Ed before we let him sit down and take a drink? No? Okay. Thank you, Ed. So on to our next speaker, Stuart Dobrovich, Asset Manager at Aberdeen. Stuart is an asset manager within the real estate division of Aberdeen, a global investment management business. He is responsible for the day-to-day active investment management of a portfolio of UK commercial real estate assets on behalf of pension fund clients. Stuart has built knowledge and expertise in rural land and forestry sectors and has taken a leading role in developing a nature-based solutions initiative for a pioneer real estate fund managed by Aberdeen. The fund has acquired land in the Cairngorms National Park in Scotland, which will see large-scale native woodland creation, degraded peatland restoration and biodiversity net gain delivered over time. The carbon units generated from this shall assist the fund on transitioning to net zero. So Stuart will be presenting the net zero transitioning and role of nature-based solutions. Stuart?
Thank you very much, Gavin, and a very good morning to you all. As Gavin said, I work in the real assets division, specialising in commercial real estate investment on behalf of pension fund clients. Our clients require real positive capital growth and income returns from their investment portfolios over time, but they also require ESG solutions and are increasingly aware of the longer-term impact of their portfolio from an environmental and climate change perspective. Ambitious targets are being set. And I'd like to touch on, in our opinion, how nature-based solutions may materially assist investment portfolios on their pathway to net zero. At the end of the presentation, I'll touch on the case study mentioned, which is the landscape pictured here. Again, this is a project which is materially assisting that fund's journey to net zero. To quickly touch on some themes, what we're seeing is a strengthening awareness of corporates and financial institutions as to the impact that capital allocations to nature can have in addressing climate change. However, this awareness needs to be converted into deliverable strategies for which there is increasing demand. Another key issue or observation is clearly there's no silver bullet to addressing climate change. There's a range of solutions to be implemented. Following on from COP, society, shareholders and clients require real tangible action now, and indeed place more intrinsic value on products, services and investment solutions which deliver real tangible results in relation to climate and the environment. So to look at the overarching level, we're aware that countries and governments need to be net zero by 2050 to achieve the objective of the Paris Agreement. I'm sure you all agree that this is crucial in terms of maintaining a habitable planet for our children and generations to follow us. To achieve net zero, we need a holistic approach. This therefore requires strategies not only to reduce emissions at a faster rate, but also remove carbon directly from the atmosphere at a much greater scale. We need to do that to address the emissions which we cannot actively manage away. Emission reduction strategies alone are simply not enough. Nature-based solutions are now widely regarded and explicitly regarded as the other side of the coin in achieving net zero. The key theme is the need for more finance and capital being allocated into nature. According to the United Nations State of Finance for Nature report, they state that there are clear interrelated crises of biodiversity loss, climate change and landscape degradation on a global scale. Looking to the future, private capital investment into nature ought to at least triple in real terms by 2030 and increase fourfold by 2050 if the world is to meet its climate change, biodiversity and land degradation targets. On the rung down to the government level, clearly more investment is needed of public funds, but the government must have a key role to play in enabling large-scale efficient investment at scale by institutions and corporates. The UK government has set explicit nature-based targets, which we'll touch on later. And why nature? Well, simply, nature represents currently the most deliverable and scalable means of removing vast quantities of carbon dioxide directly from the atmosphere. So we need to set a pathway. Touching on this at a very high level, our investors typically have ambitious targets. So the government wants to be net zero by 2050. Many of our clients want to be net zero by 2040, some even earlier. Clients demand real solutions. We must understand our full carbon footprint. That's point one. That requires a huge amount of work in the context of a large real estate portfolio, for example. Data collection, energy use analysis. From that, we must then reduce our carbon footprint. This is reducing energy intensity across a real estate portfolio, investing into assets to improve energy efficiency, such as heating and cooling systems, procure off-site renewable energy, and generate as much on-site renewable energy as possible, for example, via solar PV, where it's viable to do so. This then leaves us with an offsetting requirement, or the residual carbon footprint problem. Typically, residual carbon is dealt with by purchasing offsets from a third-party provider. This poses some questions, potential risks. It may expose investors to unknown downside risk, We have all heard that the price of carbon is increasing. On the UK's ETS system at present, we're informed that carbon is trading at £60 a tonne, with the voluntary sector prices rapidly increasing. Against the backdrop of this, there is more demand from corporations, institutions and society as a whole for offsets which are high quality and local to the source of emissions. This signals that the price for PIUs and woodland carbon units in the UK is going to increase. So with a duty to shareholders and clients, we must question what impact does purchasing offsets have? And is this an optimal use of capital? To expand on this further in relation to the Oxford Principles, the use of offsets should be verifiable and correctly accounted for. Offsets should actively engage in long-term agreements, and we must support the restoration and protection of a wide range of natural and semi-natural ecosystems with a wider focus than simply carbon, but specifically on biodiversity. So looking at the alternative to purchasing offsets, we can invest directly into nature. Why is this potentially credible? Well, nature-based solutions, firstly, you must consider risks, costs and outputs, which many of you will be very aware of. These solutions are land-backed assets. Cash flows can be known with a relatively high degree of certainty, with a manageable risk profile and a mature market, with known approval processes and government-backed enablement via grant policies and systems. There are powerful direct co-benefits which can be delivered by investing into nature-based solutions. This is biodiversity, net gain, water and air quality improvements, social well-being and community engagement, ecotourism, direct contribution to local communities and UK GDP directly. Challenges are clear from the earlier speakers: land scarcity against the backdrop of increasing land values, physical and idiosyncratic risks across projects. Therefore, there is a need for expertise and best-in-class land management. So to touch on what nature-based solutions are briefly, and the government's explicit targets, which was touched on earlier, the government has a target to create 30,000 hectares of new woodland annually by the end of this Parliament. A balanced approach is required, and we're hugely encouraged by the investment strategies available in the market today, from sustainable timber funds, which focus on commercial returns with added advantages of carbon and biodiversity. Our approach, and this project we'll come on to, is more specifically about net zero transitioning and is designed to optimise the carbon output, ecological restoration and biodiversity net gain on a per hectare basis, which focuses more on native woodland planting. Ed touched on peatland restoration. So the target we've found is 280,000 hectares of peatland to be restored by 2050, very, very ambitious. Scotland is home to 80% of the world's blanket bogs. That's a stat kindly provided by Highland Carbon. Much of these blanket bogs are degraded or have dried out. The other appeal of nature-based solutions in this country is the Woodland Carbon Code and Peatland Code. We're hugely grateful for the guidance and assistance they've given us already. These systems are leading standards. People have confidence in them. There is measurable and transparent outputs, verified carbon over time, which we can then retire against the fund's residual carbon footprint. We've touched on biodiversity net gain. This can be monitored independently via a science-based methodology. Natural capital baseline surveys can be repeated over time. This gives us a long-term mindset and outlook which is conducive and imperative to impactful positive change. Additional revenue streams can be explored, such as renewable energy, ecotourism and biodiversity credits. Will there be a monetisation of this? Will there be a standardisation and valuation of biodiversity and ecosystem services into the future? To bring this into context, full circle to implementation, so we've touched on the theory and looking to implement this for a fund. So on behalf of an Aberdeen managed fund, a REIT specialising in office and industrial investment across the UK, the fund has been particularly innovative and ambitious in addressing both sides of the coin, continuing to reduce its emission footprint and addressing residual carbon in a more impactful way. This is an example of a client setting out and delivering on a pathway. So the fund is taking a leading role in estimating its carbon footprint across the vast portfolio. It has then estimated the potential residual carbon problem over time and has made an assessment of the requisite capital allocation needed to nature-based solutions to help address its residual carbon problem, and then the implementation of that capital into the market. The outcome is that we've acquired a 1,400 hectare estate in the Cairngorms National Park. This is a landscape scale restoration project. It will deliver substantial native woodland creation, peatland restoration. There'll be 1.5 million trees planted. The scheme will be managed by KF Forestry and SAC Consulting. We're hugely grateful to them and look forward to working with them. We're obviously hugely grateful to a number of people in the market who have helped us come into the market as a new entrant, and look forward to working with you all more into the future. So this project, what does it deliver? Well, it delivers measurable outputs that we can have confidence in. Measurable carbon outputs to 2040, 2050 and 2060. Emissions don't stop at 2050. So this locks in a known carbon output and other co-benefits at a known cash flow and cost with a manageable risk profile. This is a holistic and innovative example of how we help to deliver net zero for a large-scale institutional fund. And lastly, just to touch on, this is genuinely, clearly an exciting time for the forestry and rural land management industry. You as an industry have clearly a very important role to play in enabling that larger scale institutional capital into the market. I hope this presentation has been of interest. Happy to take any questions, and thank you.
Jim, any questions for Stuart? Want to stand here?
Simon Hart from John Clegg & Co. Stuart, who's actually paying the money to buy that land and develop the farms?
So the fund is effectively a REIT, so it's listed on the London Stock Exchange, so it's made up by potentially hundreds of underlying investors, which could be other pension funds or multi-managers investing into the fund to access real estate returns. So this is effectively the equity within that fund, that legal entity has purchased the land. So this is very much seen as a specific initiative. It's not, clearly it's a real estate fund, so it's about what the potential beauty of this is as well, is that actually it's quite efficient in terms of the percentage of that fund in terms of capital that is required relative to the impact it can have. So,
and are they doing it because they have to do it, or are they doing it because they want to do it, or want to be seen to be doing it?
Yeah, so it's a voluntary market, so it's purely based on looking into the future, taking a longer term mindset, looking at the various problems that are presented by residual carbon. Where are we going to source our offsets from? How much are they going to cost? I don't think any of us really know what that future cost is, and we are first and foremost responsible for our clients' capital. So it seems more. It's by no means a silver bullet or the only strategy available, but it does seem to have that impact and risk mitigation in that respect. Yeah.
You talked about obviously the carbon benefits, etc. What about the financial returns of this project, and what's your projection for those?
Yeah. So effectively, it is a cost function, really. So everything, it's really just looking at the costs of the project relative to the carbon output. So it's flipping conventional return ethos on its head, really. What does the cost of carbon look like? But if you were to take some even conservative assumptions of the fund's residual carbon footprint, and if you had to buy offsets on an annual basis, that quickly starts adding up to, pretty substantial sums. So it's locking in a lower cost, but clearly it's an asset on a balance sheet, and over time the validated carbon units will be increasing in value. So actually there will technically be capital value growth until such time as those units convert into woodland units and are then retired, so effectively are cancelled out. But clearly it's land with at least an amenity value and an increasing carbon value as well.
Just a question on the back of that.
Yeah.
You must have a valuation technique to use to pay for it, right?
Yeah.
And you've just been with yourself, or there's other investors involved, or did you have an IRR?
Yeah, so
Cash flow? How did you win it, and why did you decide to pay for it?
yeah, so I think it's a model that we got assistance from the forestry sector, clearly. Really the key output metric goes back to that plantable hectare approach. How much carbon does it generate?
And you just put a value on that per hectare, and
Yeah.
said, I'll pay X for that.
Not value per hectare. It really came down to our estimation of what the carbon output is. So that's really what's driven the purchase price. Yeah.
So two thoughts. One, does that deal with all the, so presumably a lot of your other assets, commercial buildings,
Yeah.
does that deal with your sort of amount that you've got to find to offset?
Mhm.
And is there an increase in your commercial value of your commercial buildings, saying it's linked to this?
So there's no direct value on the commercial buildings, but as the fund overall, it is again it is just one ESG solution. So there's a projected residual carbon footprint. This will materially assist in offsetting it, but it is just one strategy. So it goes back to I think the change in kind of language, over the last year, and this recognition of nature-based solutions. And hence the government's explicit targets as well. So yeah, I'm not sure if that answers your question, but it's one part of the fund where big investors in solar projects across the fund, on-site renewables, huge investment into assets. Real estate is obviously one of the biggest sources of carbon emissions from embodied carbon and the use of property.
So when is the fund as a whole planning to be net zero by, and how much more of this type of thing are you planning to do within the fund?
2040 for this particular fund, and it's we are just under constant review. Yeah.
There's increasing talk now in Scottish governments about, they use this term, the just transition, and it's all bound up in concerns about communities and tenant farmers and such like. I just wonder to what extent that presents a risk for delivering projects like this, the complicating factor of the pressure to interact with numerous local groups with interest in the land.
Yeah, no, very good point. Case by case basis. I mean, this particular estate, there is owners adjoining to this that have drastically reduced the deer population. So, as a sporting entity with no livestock and virtually no grouse now due to various factors, really the opportunity for the landowner in this case was this emerging carbon opportunity. But yeah, I get your point that clearly we don't want to take too much land out of agricultural production. If there's tenant farmers, they have rights. We need to engage with the local community. So, but by and large, the support is there. But yeah, it remains to be seen in terms of the bigger scale of this trend, how those issues unfold. But in this case, it's marginal land owned by a private individual, and yeah, I think it's potentially a better long-term use of this particular bit of land as well.
So how resilient is this scheme to climate change? Because if we do get warmer temperatures, less rainfall, or possibly more erratic rainfall, greater flooding, would this scheme survive that?
Yeah, Highlands of Scotland. We have had peatland assessment, various surveys potentially these projects prevent, let's say, flash flooding and runoff rates. So if anything, more likely to contribute positively to that and come under threat itself. So it probably doesn't fully answer your question, but will Scotland become too warm within? That's the whole point of doing this. So 40 years from now, by taking this kind of action, it's the whole point of we must have a long-term mindset. But will trees still be growing successfully? I don't know.
Okay. Thanks, Stuart.
Okay.
That's great, thank you.
Cheers.
Okay, our final speaker for today is Daniel Ridley-Ellis, Head of the Centre for Wood Science and Technology at Edinburgh Napier University. Dan is one of the UK's technical experts, apparently, on guessing the strength of wood and can talk for hours on the topic, which he frequently does if nobody stops him. His main area of research is understanding the properties of wood and how they are influenced by tree growth, forest management, and the climate. His most recent work has been focusing on the potential lesser used and lesser known species and preparing wood for the value chain in the future. He represents the UK at European standards committees for grading of construction timber, and the majority of structural sawn timber produced in the UK is now graded with settings that Dan developed. He is also active in online learning, public engagement and science communication. He is the lead organiser of Bright Club Edinburgh, where researchers apparently do stand-up comedy. Dan, would you please come and present the question, what future is the forest growing? Thanks.
Hello everyone. You've had your intellectual meat. It's now time for your intellectual pudding, and I am that intellectual pudding. So I, like Edward, I'm going to make some bold predictions, and I invite you to come back and challenge me in the future when we know the answer. So I'll see you again in 60 or 70 years. So I'm not really going to be making predictions because I'm an academic. I barely know what I'm going to say in the next 10, 15 minutes. So what I'm going to do instead is give you context. I'm going to give you context based on my perspective and what I know, and you can mix that in with the context of what you know and what you expect. And you can make decisions about the future and where you want to invest your money, whether you should invest in something that's going to help keep the planet habitable, or you can invest your money in non-fungible tokens of cartoon monkeys. Up to you. Up to you. I'm head of a research centre at Edinburgh Napier University, the Centre for Wood Science and Technology. We have another centre there, Centre for Off-Site Construction and Innovative Structures. Together, we're interested in wood properties and the use of wood in construction. Not exclusively construction, we are interested in other things as well, but I will be talking mostly about construction because that's where the majority of the wood and the materials that we use on the planet are going. So yeah, I'm going to be talking about the future, but don't worry, there'll still be graphs and statistics. I know you enjoy that kind of stuff. So the first thing that I want to say is that we can't talk about wood quality as being a single thing. There's more than just one kind of wood quality. Wood quality is depending on the context. It depends on the application. So we can't really talk about growing good quality wood or high quality wood because it always begs the question then, well, what do you mean? What are you growing wood for? And when we're looking at the question, what are we growing the wood for in 50, 60 years' time? Well, we don't know because we don't know what the world's going to be like in 50 or 60 years. Look back at the world 50, 60 years ago, it's changed enormously in that time. So how can we predict what the markets will be like that far in the future? But the key thing is always having that knowledge about the wood properties, not just the means, but also the variation and critically the drivers of that variation. So what influences wood properties when the tree is grown and when you process the wood? So just a little bit of wood science for that context. Wood properties, well, they depend on species, particularly properties like durability and colour and hardness, machinability. They are very dependent on the species. But generally speaking, there's a lot of influence on the growth area because trees are growing wood for their own purposes. I can tell you now, they don't give a thought to us when they're growing wood. They grow wood according to what they need, and what they need depends on the environment that they're in, the situation that they're in. Are they at the bottom of a valley or are they top of a hill? Are they in a cold area or a warm area? And part of that environment is the way that we manage the forest. So the forest type and the forest management is very influential on the wood properties. In fact, I would say that foresters have more influence on wood properties than anyone else in the wood value chain. And a lot of those decisions are baked in at the beginning when you plan the forest. Don't know why that's advancing. Right. Tree selection and tree breeding, we heard a little bit about that. I think it was Peter mentioned the fact that a lot of the Sitka spruce that's being planted is improved stock. That's improved, trying to improve things like the growth rate and the straightness of the stems. That has influence indirectly on other properties like density and strength and stiffness. Processing, the way that we process the wood, has influence on the wood properties, and the way that we handle the wood afterwards also influences the wood properties. But the stuff that I'm going to be talking mostly today is to do with the forestry side of things. Now, the thing I want to say here is that species is both irrelevant and hugely important. Now, obviously, if you're planting a forest, species is critical. You need to have the right tree in the right place, and that's a species thing. If you're processing wood, then yes, there are certain aspects of the species that you need to know about when you process it. For certain markets of the wood, it is very dependent on the species because certain species have certain properties. But for many uses, including construction, no one gives a chuff what the species is. What matters is the properties of the wood, the strength, the stiffness, the density. What it was doesn't matter. In fact, you ask people what they're using, most of the time they don't know, or they'll just say spruce, and it could be anything. So species is not as important in the value chain often as we think it is, or we say it is. So the other thing that I like to say about wood is that the biggest limitation on greater use of wood is the boxes that we have in our own heads about what we can do with it. And the biggest box that we have about UK-grown timber is that it's unsuitable for construction because it grows too fast and therefore is low density. That is totally wrong. Totally wrong. I could show you graphs and graphs. I could speak for hours and hours of data measurements that we've made that proves that this is wrong. Yet it's a persistent thought that is commonly repeated, and I just want to drum it into the audience just again. Oh, another opportunity to say this is not true, and people should stop saying it. And when you hear someone say it, tell them that it's not true. And if they deny it, point them in my direction, and I'll give them the graphs and everything. Why is that advancing? So, British timber, it doesn't grow too fast. It grows fast. That's good. That's a good thing. We get a lot of timber in a quick time. That's a good thing about the speed. Trees don't grow in a way that the faster they grow, the less dense the wood is. Not in a simple way, anyway. And certainly density doesn't relate to strength. There's a lot more to strength than the density of the wood. I wish it was as simple as density. It would make my life a lot easier. So what is the future? Well, we've already heard that by 2050, there are all these pledges about being climate neutral, whatever that might mean. And the stuff that we're going to be using in 2050 is already growing in the ground. So in terms of forester time, we're already in 2050. Those decisions are already baked in. We've got that resource. There's nothing we can do about it, hardly. But there are other things that we don't often talk about. There's the raw materials supply. Non-renewable materials are exactly that, non-renewable. There is a limited supply, and we have to move to some kind of better circular economy to be able to cope with that raw materials crisis. And it's not just a crisis of wood in construction, it's a crisis of sand and cement and all the other materials that we use. And as well, we've heard today mention of different public attitudes to forests. Voters, people who make the political decisions, have different opinions on what forests are for. Are we growing forests for timber, or are we going to put aside forests for other reasons? And that's going to change the resource that we get in future. It's going to change the potential of the forest to deliver. And the other big context, the elephant in the room, is the global demand and consumer demand for wood, this growing global hunger for wood. And the trade is international, always has been for the UK. But that big thing, that growing underlying demand for wood, is going to be very influential on the prices and the markets and the use and the availability of wood in the UK. Good thing is we've got technological development going on. We've got new opportunities in processing and new wood products. and we're increasingly getting aware of the different services that forests can provide as well, some monetizable even, but ecological services, ecosystem services, recreation, tourism, all that kind of stuff. So somehow we're going to have a lot more wood being used. That's inescapable. But we're going to also somehow manage to get that wood with less each, because the planet is growing. There's more of us because we're living longer. So we somehow need to get more from less. So we need to move from this traditional forest product sector that we had 20, 30 years ago to something that you could call a circular forest-based bioeconomy. Okay, find their words. But what I mean is that we move away from the traditional things, the traditional value chains for timber, into a bunch of things that we never used timber before for. Somehow, though, preserving all the good aspects of the traditional forest product sector that exist, because many things are super important and shouldn't be damaged by these new opportunities. So what is the future for materials? Well, construction materials have been mentioned, and it is the biggest use of materials on the planet, is construction. And you will have heard about things like cross-laminated timber and the huge potential for using more of that in the UK, including from homegrown stuff. Consumer packaging, so there's been a decline in graphic papers, but there's been a big rise in paper for packaging now that everyone's doing online shopping and things like that. So, and as well, if we're trying to replace plastics with bio-based materials, well, wood is one of the opportunities that we have for that. So that's going to be more wood fibre going into that use. Energy, personally, I think that probably wood fuel will start to decline in the UK because of concerns about air quality, certainly small scale. Wood fuel, as much as my personal opinion. And I think more opportunities will go into the liquid fuels being derived from wood. Textiles, we barely mention it, but quite a lot of the textiles in the world are made from wood fibre. And if we try and displace a lot of the stuff that's made from fossil fuels, from petrochemicals with wood, well, that will be a good slice of the available wood supply in the world. Food, I mean, there's the literal things like the pine nuts and the venison that you get from forests, but there's the stuff that you never really notice, like the microcrystalline cellulose that you have in your ice cream and your mashed potato. Quite a lot of wood fibre going into that thing as well, and more going into livestock food as well from wood fibre. Plus biochemicals giving you pharmaceuticals and plastics, plastic replacements, biocomposites and all that stuff. So many new markets for the wood fibre and the solid wood. Plus, we somehow will still need all these important basic products that often we don't talk about when we're talking about high value, but they are high value in the sense that we can't do without them. We can't do things without fencing. We can't do things without pallets that move everything around on the planet. So the other thing that I want to mention is the sources of wood fibre. So we have the forest and the co-products from the processing right now, but we have to increasingly look to the cascaded wood as a wood resource. So actually the built environment contains a lot of wood, our houses contain a lot of wood, and that is itself a resource that we need to start using more of. And there's already a lot of recycling of wood in the UK. It's a very good story so far. So a bit more context is just showing you where wood features on the global UK's raw material footprint. Wood is right at the bottom with the dark green there. And the surprising thing is that quite a lot of what we use is already biomass. So we're already quite on the way to this bio-based economy. But look how big the blue one is, that non-metallic materials, how much of that we use. Most of that is construction materials. So if we're serious about replacing the non-renewable construction materials with wood-based stuff, just look how much volume of material we use and how much demand that could potentially put on the wood supply. So there are two horizons, really, looking at the future of wood. There's the horizon where the future is already set. This is the stuff that's growing in the ground. We've already made those decisions about the species. The availability is set. There's nothing we can do about that, really. Same with the properties. There's nothing really that we can do about the properties of that apart from being a bit more clever in how we segregate the wood into the different markets. So that kind of future is already set for us. And that's the 30 or 40-year horizon. The next horizon is the stuff that we're planting now, the future that we're making for our children and grandchildren and our old age perhaps, where we are now making decisions about what species we're going to plant, including improved stock and hybrids, so different versions of the familiar species. We're making decisions about how we establish those forests and how we do the forest management, and they will have influence on the wood supply, the nature of the wood supply, the quality of it. So this is the Forestry Commission availability forecast, which is due a renewal, I think, early next year. So this is about as out of date as these things get. But I just want to show you just a little bit of context to see there that the relative supply of Sitka and Norway spruce is decreasing, and that's because of the lack of planting in the last few decades. So we're enjoying, or have enjoyed, a boom thanks to the planting in the 50s to the 70s. And now we're heading into a bit of a sparse period. Now, the good news is that we've been under-harvesting, as I understand, so that hump can be smoothed out, but we are needing to plant a lot now in order that we have, by 2050, a bunch more timber to be working with. And you can see as well that the relative amounts of these other species start to increase, and you see more hardwood coming in there. Still a relatively small amount, but more hardwood than we're using right now becomes available. Let's zoom in on the hardwood, see what that is. And there's quite a lot of birch, a bit of species like alder and willow, sycamore and so on. Now, we've done a little bit of work on hardwoods. One thing I'll say about hardwoods is I don't think that this is going to be suitable really for the traditional markets for hardwoods. It's just not had the right forest management, most of it. But there are other things, potentially new kinds of products that we can make use of this hardwoods. I think someone's presentation had mention of hardwoods in construction, and that's potentially one thing that we can do with these kind of laminated construction products is put the hardwoods in there. Okay, busy slide, but I'm just going to show you here the main species, the spruce, the larch, the Douglas fir, the pine. These are the ones that we can grade and get into construction markets right now, softwoods. The other ones are ones that we can potentially get in. There's no opportunity to do that now, that we don't have the knowledge and the data to support those grading assignments. But we're starting to collect that data. We're starting to see where it would fit, how it would compare to Sitka spruce. And the good news is that there are lots of candidates. There are lots of species that will produce timber that functions as a product like Sitka in the way that it processes and in the way that it would be graded and used in construction. And there's an opportunity there, I think, to blend in those other species with the Sitka in the existing markets without the customers even hardly noticing that anything has changed at all. So there are easy ways of diversifying our forests, increasing the variability of the timber that we use, and we have to, for reasons I'll get on to in a moment. Hardwood is a bit of a different story. The hardwood construction grades that we have are kind of based on oak and the traditional timbers, and now we're starting to look at non-traditional hardwoods here in the UK and also in Europe, sweet chestnut, poplar, eucalypts, those kind of things, and they have completely different profiles of density and strength and stiffness and so on. So there needs to be a bit of work to kind of reconfigure the way that construction grading is done to get more hardwoods into construction. I mention it because there's very little work going on right now on that. So if you want to see more hardwoods in construction, you have to somehow get the research done on that, because at the moment we're not doing what's necessary. So you'll have seen, I guess, pictures of cross-laminated timber and things like that. There's lots that you can do, and the good news is that this uses so much wood that you sell so much wood into the construction industry, you make a lot of money. But the other advantage is they use so much wood that you don't need that wood to be good quality wood. And our idea of cross-laminated timber has somehow got on its head. People are now thinking, well, it has to be good quality spruce or imported pine to go into CLT. No, you can put any old timber into that, and because there's so much of it, it will work fine as a construction product. But there are some concerns. So we need somehow to continue to increase the productivity of our commercial forests, because there'll be more pressure on them, the more expectation, because we are putting we're going to be setting forested land aside for other reasons. So there's going to be more expectation on those commercial forests to produce the timber that we need for society. And as we do that, we need to maintain the stiffness of our spruce resource. People have talked in the past about density as being the main concern. It's really its stiffness. And stiffness is quite strongly influenced by tree breeding and the forest management. And stiffness, if you have a 5% drop in the stiffness of the resource, in production, you'll get a 15% decrease in your yield. So it's a disproportionate effect. So stiffness is one thing that we need to keep an eye on. We need to get a wider range of species into the value chain, and we need to be more efficient about the wood that we use, and we need as well to be thinking about the circular economy. So what is going to be the next use of wood after that? Because wood is limited. Like, we can no more go back in time and plant more trees than we can go back in time and put more coal in the ground. So at any time, we have a limited resource, even though it is a renewable material. So just a little bit on the demand for wood fibre. In the last few years, global timber consumption has been growing about 1% a year, which would mean then a 1.4 increase by 2050. And current UK planting targets, not what we've achieved, but the ambitious targets that we have, would more or less keep pace with that. There's going to be a delay, of course, because that wood's not going to be available for 30, 40 years. But it would more or less tread water, yeah, in terms of the global timber demand, if that was business as usual. But actually, it's not going to be business as usual, because by 2050, we can probably expect global timber demand to be increasing by about 3% a year, which would mean a 2- or 3-fold increase by 2050 based on current consumption. Why? Well, because the world is getting more affluent. People are needing houses in other parts of the world that are developing. There's this ongoing urbanization. People are getting wealthy. They want the tissue paper and other things that make life comfortable. And a 2- or 3-fold increase in wood consumption would start to hit the limits of what the global forest supply can actually provide. So we start to hit the limits of the natural system. And the elephant in the room there is that historically, materials demand has kept pace with GDP. So if GDP is expected to rise, we expect then materials demand, or materials use to rise. Now we can't do that because there's a limit now on a natural system. So we somehow have to decouple materials use from development, economic development. Resilience will be the watchword for the next horizon, for the stuff that we plant now. Resilience of the forest against pests and diseases, storms, fire, flood and drought, all the consequences of the climate change that's happening. But we just shouldn't think only about resilience of the forest itself, but we should be as well thinking about resilience of the wood value chain and all of the companies that rely on that supply. They're just as vulnerable as the forests to shocks to the system. And there are other shocks as well that come from economic cycles, the boom and bust around the world, not just the UK. I mean, if other countries boom and bust, that will have a big impact on the UK market. And the global trade, because it's inescapable that we will remain a big importer of timber. We're never, ever going to be self-sufficient in timber. And global politics will continue to interfere with that supply. And if you read a few papers, people say, oh, well, don't worry, there's timber available because there are countries like China and Russia that are under-harvesting at the moment. Well, okay. You can rely on countries like China and Russia to provide you with your timber, can you? Okay. Yeah, so obviously there's going to be economic and material supply booms and busts that come from storms and fires and politics and all that stuff. And we need to be thinking about resilience. And if we're continuing to feed our industry on a limited number of species, then we will be very vulnerable to shocks in the system. And that's one of the reasons why we need to diversify in terms of the species that we use and the products that we make. So I am coming to the end of this. The summary is the future is good for wood, but we need to plan ahead. Because technology is changing, wood products are changing, wood markets are changing, and the thing that nobody talks about hardly is that wood itself is changing, including our familiar species, Sitka spruce. All that we're doing with tree improvement, with changing in forest management, will change the nature of Sitka spruce in ways that matter for the users. And again, I come back to having to address these misconceptions, particularly about UK timber and the quality of it. So, thank you.
Thank you, Dan.
Thanks.
So I'd like now to welcome back all our speakers, and if you could take a seat here for the Q&A session, please. And I'd also like to invite my colleagues from Tilhill, David Edwards, Forestry Manager, and Harry Stevens, our Timber Purchasing Director, to join us. They will be able to answer any questions that you may have specifically about forest management or indeed the timber markets. And open it up to questions from the floor. If you would please raise your hand and shout, and I'll ask you to shout out your question. But if I could ask you, the speakers, just to paraphrase the question as it comes in for the benefit of those on the live stream, please. Okay.
Just a technical one. Speakers need to be in front of the screen because of the live stream.
Yes, please, apparently. Okay. Yes.
Start off with an easy one. The GM crops, are they more disease resistant? And is disease more prevalent now than it was?
Wants to pick up on that. David, is that?
I think the short answer to that one is that there's no evidence that they are more or less. Some of the techniques that are being used for developing new genetic strains, if you like, lend themselves to speeding up breeding, so that we could actually potentially breed resistance to, or selectively breed resistance to pests and diseases.
Is it worse now than it was, say, years ago?
In terms of the susceptibility?
Yeah, not just the general level of disease.
The risk for pest and disease is greater, and that's basically on global trade. You know, it's easier for pest and disease to get into the
And they're all known diseases. There's nothing new out there, is there?
There's nothing new that we don't know. Those that study these things, the horizon scanning is one of the big things that they do to try and predict what's going to be the next big threat. You may have heard the Apis topographus is the one that's causing some concerns now in the south of England, and that's one that's been known about coming our way for a long time. So hopefully, if we can know what's coming, then we're able to get ahead of it and deal with it. Okay.
Yes.
We talked about timber for carbon, for wood production, and for amenity use. We haven't talked about woodlands for biodiversity, which I guess probably is the fourth quarter. We touched on ecosystem services at one point, but the UK is in a big decline with biodiversity. We all recognise that, but it hasn't been referenced today. Does anybody want to talk about biodiversity and the importance of trees?
Ed, do you want to pick that one up?
Yeah, I can pick that up. I mean, naturally, there is a significant sort of emphasis on wood production in this particular forum. I can accept that. There is certainly thoughts in the industry that biodiversity is important, but I think that the emphasis is on about planting land and trying to create a greater resource in the future. And with that, biodiversity is important, and it will continue to be important. And in certain situations, biodiversity in commercial forest, the perception is that it's really poor. But in actual fact, in some cases, it's not. And there are some fantastic examples of biodiverse commercial forests. So the focus, I accept, has been on the sort of commercial side of it. But there is I would imagine every forester in this room is concerned and interested in biodiversity within their forest, which they manage. So I don't think it's being swept under the carpet at all. I just think it's something which people do in any event, and they manage their forests in that capacity.
May I? Yeah, I mean, I have to say, I think if we had thought about this event 2-3 years ago, we certainly probably wouldn't have thought that we'd spend a lot of time talking about bogs and peatland and what that can do for carbon. Yet suddenly, actually, that was the talk. I was really interested to see that was the talk where we had all the questions. You know, so you can see where the interest is. And actually, I think, you know, there's various ecosystem services out there at the moment that are not monetized. Some of them are just coming on stream now, like the peatland restoration. But biodiversity, in my view, is the next one. There's already, we've seen talk about biodiversity units. People are thinking about what's their biodiversity baseline. It's a short couple of steps away now that's going to be monetized, and I imagine we'll be here next year or maybe in 2 years talking about what's the effects of biodiversity credits been on land markets.
I think that's really important, just to echo what Dan has actually said about common held misconceptions. I think we as an industry haven't done a huge amount in benchmarking the biodiversity in our commercial woodlands, and I think that's something for the existing portfolio of forests that we have to be considering to take forward, because there is, as Ed has said, lots of good examples of biodiversity in existing forests. Sorry, Dan, you wanted to come in?
Yeah, I just wanted to say as well that if we're considering forests for biodiversity, we should also think about what that displaces in terms of the wood supply and the impact on that offshored forest and the impacts outside of the country on biodiversity. But the thing I wanted to say was that like we see a lot of talk about what should be planted in biodiverse friendly forest, and even some statements about how that will produce high value wood products potentially, but no thought really to how that's going to happen. I think no one is thinking about what kind of forest do I want, what could that provide, and then how would we then get a material that would feed our insatiable need for timber through that. So it would be interesting, I think, to do more of the work that we're doing on the commercial species, to see that kind of work going on as well in terms of the timber that can be provided by these other kinds of forests as well.
Okay.
Okay, we have some questions from the live streamers.
Oh, excellent.
Fantastic. We've got one from Forest Form. I'm guessing that's their stage name. How is the price per plantable hectare calculated for planting land? The area that ends up being approved under a grant or EIA, Environmental Impact Assessment. That originally came in during Ed's presentation.
Do you want to pick up on that a minute?
Yeah, very happy to. The price paid for plantable land, well, I'm sure there are more people in this room than me, or there are other people in this room more than me who can give you a better answer. But from my perspective, it comes down, if we're looking at a piece of land with planting potential on it, you're identifying what can be planted, and then you are calculating your investment returns from it. And you're effectively back calculating what you can afford to pay. And it goes somewhere to my point about discount rates. And certainly discount rates in the commercial forestry plantation market have come down, as we can see with the higher values being paid. But in terms of planting land, I think over the last 5 years, we were expecting real constant price returns on planting land of maybe 6 to 9%. IRRs, but now I would imagine they are much lower than that, significantly lower than that, because simply the risk of planting has come down. We are getting better at it. We have got a greater propensity to plant, or we've got a greater political requirement to plant, and as a result, I think that we will be doing a lot more planting, and as a result, that risk has come down. So I suspect investment returns are also coming down as well.
Peter, do you want to?
Yeah, I was just going to perhaps add to that thinking about maybe if they're trying to get to the bottom also of how we actually came up with the numbers. I mean, there's a little bit of requirement for us to do some kind of assessment to actually, when we see sites, we're obviously not doing an EIA on every site that we see on the market. But what we can do is make an estimate of the plantable area just at a high level basis. So that's what we're beginning to do now across the market, and we can actually, we're plus or minus some amount, so that should be made aware to everyone. But we think probably in the round it's okay.
Yep.
On the plantable land data that you showed, what do you think your kind of market coverage is? Like, is that kind of roughly 50%, roughly 20%, roughly 70%? Like, what do you think you're sort of covering of transactions in the market and things like that?
That's a very good question.
Sorry, Peter, can you repeat the question just for the live stream, as they can't hear the questions in the audience?
Yeah, no, so that question was about how much of the market we're covering in the planting land. I would say we're pretty good, but we're not quite as good as we are with forests, is the honest answer. And the reason for that is if you've ever looked for farmland, you will see there's absolutely hundreds and hundreds of agents that sell farmland. And also there's a degree of off-market activity in the farmland market. So we're obviously capturing as much of that as we can. And this is our first year doing it, and we have established a kind of market covering system now to do that. But as you'll probably know, in the forestry market, it's a much more limited range of agents. So it's a challenge, but we feel this was the year we've overcome it sufficiently to present credible data.
Wonderful, thank you, Peter. You had another question to do with a point someone made about UK hardwood in construction. Where's that going to come from?
Who would want to pick that one up?
I mean, I can have a stab. There is hardwood out there, but it's not what we have traditionally used for hardwood construction. It's smaller logs, less straight, different species. It's potentially the stuff, a lot of it's going into biomass energy right now, or just standing in the forest doing nothing. Those are the hardwoods that are potentially usable in construction. And when we talk about using hardwood in construction, it might not just be the main structural members, it might be things like compressed beech dowels to replace metal fasteners. So it might be relatively small things, but making use of that hardwood resource.
Yeah.
Can I just answer one point first about the biodiversity value? I think that is priced in the sense of carbon units. Carbon units aren't sold at a particular rate according to the market. They're a mixture of demand and supply of who wants to buy carbon units and where. And those schemes, especially new planting schemes that have a lot of biodiversity aspects in them or are close to market, will get a higher price. So therefore they are being reflected in some of the schemes that we're doing. The question I had was, you mentioned about the trees being planted today won't affect the demand in, or the available market in 2020 or 2050. What about species such as Paulownia, which has great potential? Have you seen any research into that and its potential use?
Yeah, so the last bit of that question was about fast rotation species like Paulownia, which potentially could be planted now and provide timber before 2050. So yes, I think there's growing interest in that. There's been work on Paulownia in Central Europe and in America where it's invasive, and they're trying to find use for it. But the new, from what I understand, like the new idea about Paulownia is that you can use genetically hybrid stuff that is infertile and so won't have that invasive habit, and that maybe then you can get a decent amount of timber in a 20 or even a 10-year rotation. It's very low density stuff though, so we then have to change our ideas about how we use that, and fire is one of the big things about timber in construction that's not been mentioned today, and in the low density species that is a concern. You have to deal with the fire resistance in another way. But yes, planting those super fast-growing things will help with the carbon sequestration and potentially help with the timber supply, but obviously you're running up against the fact that they're non-native species and they're tinkered with. So it'd be interesting to see what the public opinion of those is. But I don't think we're going to have much of our, it's not going to provide much of the mix in terms of volume. It's going to provide some, but when we're looking at the big numbers, it's only going to be a little supplement to the bigger picture, which is why I didn't really talk about it much.
Thank you, Dan. Sander?
Question for you, Dan. Do you expect that the deforestation curbs discussed at COP will have a noticeable impact on the supply of timber?
So the question there is, will the deforestation curbs discussed at COP have a noticeable impact on the supply of timber? It's not my area of expertise. I would say that it shouldn't, because we shouldn't be using timber from deforested land. Now, obviously we are, because there's a lot of illegal and dodgy timber out on the market. So yeah, probably in a global sense it will, indirectly, because people are using it and they'll start using the legal and sustainable stuff, and that will change the supply for us. But yes, but having said that, the biggest drivers for deforestation are not timber supply, they're land use change.
Question for Stuart. How important do you think it is for your underlying investors to keep the carbon units connected to the land? So do you think as soon as those units are verified that they're sold, or the PRUs get sold now and the land gets left behind? It's just something we've been pondering quite a bit. Are these units worth more staple to the land or separately? How do investors, funds in particular, view that?
Yeah, thanks. So for the live stream, what is the strategy for the units? Will they be sold or decoupled from the land? Effectively, from our strategy, for net zero transitioning, you clearly need to have a verified unit to actually offset with. So if it's sold to generate income, it's effectively an income or an impact fund generating income. So I think certainly in the case of insetting or offsetting, the investors want, I think, as direct a link to the land as possible and a long-term management plan. So in that context, for what we are envisaging, from the outset, the investor is very much committed long term to seeing projects being validated, but then also awaiting verified units. So I'm not sure if that's of any use, but we are aware of that generally from projects, PIUs, the validated carbon units can be very easily assigned to any entity, and it would just be a private treaty arrangement as to what the price is and the contract around that. One of the challenges, I think, is that carbon projects are long term. So again, we all need, I think, a changed mindset that if you sell pending issuance units with a maturity date 70 years from now, who is managing the project? So I think the whole thing works well if the underlying investors are using those units for themselves as opposed to selling them.
Yeah, because I think when the value of the units starts to dwarf the value of the land, then potentially some issues there. Might not be so existent in commercial forestry, but certainly on peatland restoration and things. Interesting to see where that goes.
Agreed.
Okay, so we have two more questions left on live stream. One of them is, how are the co-benefits being measured and verified? I believe this came in during Stuart's presentation, I'm not sure.
Yeah, so clearly we are not at Aberdeen. We don't have the internal resource in terms of scientific background or ecologists. So we believe that going back to the biodiversity point, I think we did touch on this, that the whole rationale is not just the carbon driver. It's specifically why we're doing it is for biodiversity net gain, and that's why the emphasis again is on native woodland creation. So who monitors it? It is independent, qualified scientists. So there are companies such as Natural Capital Research, a team of scientists from Oxford University, who would report a natural capital baseline, and then that gets repeated every 5 years. In terms of the scientific methodology behind it, it's fairly bespoke, and I wouldn't try to pretend to run through that in detail just now, but effectively an independent, credible party would monitor it over time.
Okay.
Fantastic, thank you. And we have another question. How are we going to be able to buy land that is capable of growing species other than Sitka?
Peter.
Yeah, well, the good news is we can absolutely buy land that can grow species more than Sitka, and I was delighted to see Dan's slide highlighting the other species. I mean, the wonderful thing, I alluded to it on the speak about land getting better, and actually, although much of the first rotation forest that we spoke about earlier are Sitka spruce type forests, much of the afforestation land is occurring on soils which do have that capability to be able to grow other species. So I hope the whole business of resilience and introducing new species over time is going to become easier as the kind of the net average hectare of forest improves in quality.
Okay. Do we have any more questions from the room? Yep.
Simon Hart from John Clegg & Co again. Stuart, you said that nature-based solutions were the best way to sequester carbon.
Yeah.
What happens if carbon capture and storage gets cost-effective at an industrial level? And will that undermine the argument, and how close are we to carbon capture and storage being cost-effective?
Yeah, so the question's about industrial carbon capture versus nature. So yeah, nature is the only scalable and deliverable way to remove carbon directly from the atmosphere. So at what point does industrial carbon technology catch up? I think they would be used together, so we need multiple solutions. Industrial carbon capture wouldn't provide biodiversity net gain co-benefits, so potentially less appealing. Industrial carbon capture, to my knowledge, appears to be at the kind of lower end of scale and capacity at the moment, and I believe costs from it's in a kind of still really a research and development stage, if anything. There are, I believe, some industrial carbon capture facilities in Iceland at the moment, and I think their cost of carbon unit is $1,000, or there seems to be a range of several $100 up to $1,000. Those are being purchased by large corporations. So yeah, I think we all need to monitor that closely. The rate of advancement in that technology, I'm not sure, but I suspect it could be anywhere from say 5 to 15 years away before it's as scalable as nature. But nature, of course, takes time, and you see from the Woodland Carbon Code output tables the amount of carbon to say these milestones of 2050. Generally, we need to accelerate the rate of progress in the 30,000 kind of hectare planting targets if we're to maximise the amount of verified carbon by those times.
Okay.
Do you have time for one more? Another one's just coming through last minute through live stream.
Always for live
Yes.
stream.
Okay. Is there any indication of an upper limit on growth rates and quality of genetically improved Sitka spruce?
Well, of course there is. I mean, it can't be infinite. But I've seen some quite surprising figures, yield classes that exceed what's in the yield class tables. I mean, yeah, it's quite a bit bigger than the stuff that we normally talk about. But of course there is a limit.
Yep.
Would the potentially higher prices for sites that can be subject to afforestation or other sort of restoration projects, do you see like increased appetite for potential land sellers, like for example marginal agricultural land? Are all the farmers basically looking at this, seeing the prices going up and being like, right, let's get it on the market? Like, is there a kind of supply side difference there with these price increases?
Sorry, I was going to say.
Yeah, I can quickly, and we've both got a view, I'm sure. Absolutely, I think that there is greater value to be had on market than off market, and I think you may have asked a question about off market transactions. But yes, I think that there are landowners who are seeing the values being paid for sort of rural, marginal land, and I wouldn't say they see there's value there for a solution, whether it's a family solution, and they want to, and they are definitely bringing it onto the market quicker than they have done in the past, where it might have been done off market. So I think there is the opportunity there for sellers to come to the market and get good values for their land. I think there is more coming to the market in that respect than there has been in the past.
Peter, did you want to add to that?
Yeah, I was just going to say, you know, we know that the amount of agricultural land that's been coming to market is down from long-term trends. But I think what we've seen is actually, because of the demand and recognition of, and breadth of buyer type that we're seeing in the market at the moment, there's more of that land segment is being looked at and examined by these buyers.
Okay. Sorry, there's one more just here on the left.
Yeah, well, just established that trees don't grow to the sky, but what's the biggest risk to the asset class going forward, probably for you? Is it a construction recession or interest rates, pre-develop affecting people's IRRs? What's going to derail it in the short term, maybe if rates are?
Well, I think there is a risk that inflation, and it's then dealt with by interest rates. And if interest rates go up, although the Bank of England seem fairly steadfast in keeping them at zero, then I don't think there is a risk. But on the assumption that they eventually get there, and I suspect they will get there, and they do increase interest rates, the impact is on exchange rates, which then has an impact on your timber price, i.e. your imported timber price. And as Dan alluded to, we're operating in a global timber market here. It's not just a UK timber market. That is a sort of commercial risk. I don't think there is a risk that there's going to be a reduced demand. But from an investor's point of view, your property may be worth less than what you paid for it today. But there is going to be continued demand for wood products for the next however many years. So there is no risk in that, in my perspective. There may be a temporary sort of fluctuation in value, but I would certainly say, and I was speaking to Harry, who may have a view on timber prices in the short to medium to long term, is that we've got to a level where we're not really going to go we're going to go below. So the risk, I think, from a commercial point of view, is a significant increase in interest rates, but I can't see it going up massively in the next 6 to 12 months.
Harry, do you want to pick up on the timber market? Or just give you, project your voices, you're very capable of doing.
Well, timber prices at the moment, we probably are going through a bit of a blip short term, as the supply chain has really caught up with demand. So we've seen the builders, merchants and all these guys completely chock with material. But medium term, I absolutely agree with those comments. I think we're going to see strong demand going forward. And even in the short term, last week in South Scotland we saw 2 large parcels sell. One got 10 bidders and sold for £80 a tonne, so it's probably going for about £40,000 a hectare. One sold for about £60 a tonne and only had 3 bidders. What's the difference? But the one with the higher value was about 80% sawlog, very much a very good quality parcel, as good a parcel as I've seen for many years in South Scotland, with a high proportion of long length log, which is really what the sawmills want. The other one had quite a few problems associated with it, but notably access was a problem, and the amount of wagons that you could dispatch on a daily basis. But so short term, we're maybe seeing a wee bit of a blip, but certainly early next year we're anticipating stronger demand starting to pull material through. So yeah, I'd agree with
Thanks, Harry. If I could just add to that, Dan talked about the global increase in demand for timber and the fact that the UK is such a large importer. So whilst we might see short-term blips in valuation for timber, certainly the longer-term view must be that you're seeing timber being heavily demanded. So sorry, there was one final question here.
Are you beginning to see a resistance and political pressure from the planting land in the sort of, through Wales, all the talk of greenwashing, and people beginning to be resistant about tree planting?
We've seen that.
Yeah. So is that going to impact the market?
Peter, do you just want to summarise that?
Yeah. So the question was, have we seen any resistance from communities or agricultural circles, or those throwing the accusation of greenwashing around? Yeah, we've seen some small things in the media. When you actually read the substance of the stories, I wish actually many of the people who wrote those stories had been in the room today and heard what we were speaking about, because I feel like sometimes there's perhaps people, aiming for some kind of political advantage by promoting a certain attitude rather than actually having genuine concerns. I mean, there are some genuine concerns that are raised, and it's a continual process of trying to improve what we're doing, our engagement with communities. It is a part of the tree permissioning process under EIAs. I know there have been some local politicians, most recently in Wales, suggesting that was insufficient. But I know for a fact that many of the investors, indeed some of the investors in this room, from the ESG point of view, would be horrified to think that there was any negative, and indeed would want to do whatever it takes to ensure that they can show that they are investing in local communities, they're investing in rural jobs, green infrastructure, and that it's all centred around this 2050 goal, and that actually there's enormous positives to be had.
Okay, just time for one more. I'm looking to the back here. Yeah, just time for one more.
Sure. I think it was in the last budget that we have for England an extension to this Nature for Climate fund. I think another 750 million has been put into that. I just wondered whether our panel could give some suggestions for how that taxpayer funding could be most usefully deployed in support of forest and woodland for England, given all the priorities we talked about this morning.
Ed?
I might take that if I may, but obviously feel free to jump in. There was I did a speech about in May talking about this, a sort of visioning exercise about trying to identify areas in the UK and England specifically where greater tree canopy is acceptable. The issue which we often have here is that certain areas in the, for example, Yorkshire Dales, they are untouchable from a tree creation or woodland creation perspective, which I think is wrong. We live in a changing landscape and we need to accept that. I think that part of that money could be looked in to try and get community engagement of actually changing a landscape for the good, and to be able to create more woodland, which is what we're all trying to do at the moment. And we've got a 30,000 hectare per year by the end of this Parliament target to reach, and we're nowhere near that. And so I think that part of that money should be looking at areas which we can increase the tree canopy. So that's where I would put a slug of that cash, is trying to identify areas which is, first of all, it's going to be acceptable to the local population, and B, it's actually the sensible place to put more trees.
Anybody want to add to that? No? Okay. Well, I think we'll draw the questions to a close now. I'd like to thank our panel for their presentations today and their answering the questions, and to thank you in the room and online for your questions. I hope you found today useful and informative. I think one of the things that I'm taking away from this is that the outlook for forestry is very strong. We've heard from Peter about how second rotation crops are seeing improved valuations due to improvements both in infrastructure, land quality, and the tree genetics. We've talked about the global nature of the timber market, and how here in the UK we're not self-sufficient. And that whilst we have very ambitious planting targets, we're a long way from them. So the opportunities are there, and as Peter put it, the only way is up. So I'd like to thank you all for your attendance today. For those of you in the room, there is lunch at the back, and please do pick up a copy of the report on the side here. And for those of you that are online, the report will be available on the websites, both of Tilhill and John Clegg & Co. And so with that, thank you very much.